delighted to be here with Megan and Chad, in particular because they are my favorite types of panelists. I said before the show, hey, do you want to catch up and talk about questions? No, don't worry about it. We'll be fine. So, as mentioned, I run EY's FinTech and payments team in the region, based here in Hong Kong. Genuinely delighted to have what I think is fair to say is certainly amongst the most prominent, if not the most advanced, fintechs, challenger banks, non-banks in the UK. I want to talk about how the UK is, I think ahead of the curve in many regards when it comes to these types of solutions anyway. But just for the benefit of the audience, to set the scene for you guys, I think here in Hong Kong at the moment, we're seeing a pretty interesting moment around virtual bank authorizations. So for those of you who don't know, the Hong Kong Monetary Authority is in the process of reviewing applications from a range of new players, fintechs, insurtechs, traditional banks, non-traditional financial services players, and others as they seek to get a full retail banking license. So, we think the next 12, 24 months are going to be a very exciting moment in Hong Kong, and as a consequence in the region. And I think the first question that I would have for you guys is, what should we be learning from the experience of a Starling bank in the UK or a Revolut from a European perspective? Any tips for the applicants, many of whom are in the audience today?
Yeah. I think this is really quite a good setup with the dynamics because we're competing in a similar space, but we're quite different. And I think what we'll see in Hong Kong is a similar difference in the challengers. So with Starling, we launched fully as a bank. We were never a prepaid card or any other type of offering. We really wanted to differentiate not only in that tech, but really competing as a full bank account. Whereas there was others, such as Revolut, who were really looking at the user experience and creating the app, but didn't get the banking license immediately. And from our perspective, I think we saw that you get a lot of distinct challenge or benefits as a bank, which was great to launch with, but I'd say launching as a prepaid card from some of our competitors, what you see is there's a certain first mover advantage in terms of customer acquisition. So there's trade-offs in terms of how you make money and the benefits you have, the types of services you can offer, with the trade-off of getting to market faster, because building a bank and getting the license just takes time.
Yeah, and I guess the equivalent here would be we have stored value facility licenses, which I guess would be the equivalent of a Revolut today. I know you guys are going for the bank license and so on and so forth, but then for the virtual bank license, that is itself a full retail bank license. So I think we're going to see hopefully some of those same competitive elements here in Hong Kong that you guys have seen in the UK. Yeah. Chad, any kind of words of wisdom from the journey for some of these guys starting out?
Yeah, I think, Megan will disagree, but I think for us, we didn't want to be a bank.
We like disagreement. We want disagreement. Yeah.
We didn't want to be a bank from day one, and I'll tell you 2 reasons why. A, it does slow you down a bit in our experience. Some may disagree, but I think the numbers and the data and the expansion speak for itself. And we really wanted to focus on customer acquisition. We really wanted to focus on building great products, building up our user base, because then that transition from turning them into banking customers would be far easier. When you launch as a bank from day one, you have no trust. You have no, you're brand new to the market, and are you ultimately offering, other than better technology, are you offering a lot more and the same wide array of services as banks do? I'm not convinced, and I think you can see this from a lot of challenger banks who are showing that somewhere between 20 and 25% of their customers are depositing their salaries. I think that's a clear indication that there's not quite the rallying call as people think. So we wanted to make sure that we could basically do about 80% of what a bank could do, but absolutely focus on the user experience, build products that wouldn't be held back by local regulation, and build up an army of customers. Because when we do become a bank in the very, very, very near future, we've already got 3 years behind us, 3 million customers, nearly 10,000 accounts per day. That transition is far easier to say, hey, you've trusted us with all this, now you can trust us, the bank. And they'll sit there and be like, yeah, fair.
Well, but I think so to be a little bit contentious. So in the UK, there was Starling, who started out as a bank, and then there was Monzo, who was a prepaid card but became a bank. So someone who's kind of done this transition. And what we found really interesting is when they released their annual accounts this year, is we launched about like a year and a half later. So we had fewer customers, but we already had significantly more deposits. So people who were using them as a prepaid card would top up via Stripe, and then would just kind of use it for spending, but would have someone else as their main bank account. So it's almost like it appeared to create a customer behavior that was difficult to change. But I think also from our perspective, to really compete with change, like with banking, and to be a challenger bank, we needed to be a bank to do that. So for a long time, like when I was working in financial technology previously in San Francisco, what we saw was there was lots of great companies coming to market and competing on particular verticals, But at the end of the day, they were all still relying on banks for some of the core processes and fund flows, and that hadn't changed in a long time. In the UK, they hadn't given a banking license in like 125 years. It was something that was quite new to the market, and there was so much opportunity to improve upon that you just couldn't do as a prepaid card. So for us to actually compete with the banks, to really change it from a technology perspective, as well as the user experience perspective, and also to get customers using us as an actual bank and not just as a travel card or topping it up, it was quite key for us to actually have the full banking license to do that.
So let me jump in before we get a real tete-a-tete going. But yeah, again, kind of thinking of it in the Hong Kong and then regional context here. I mean, I think many of the new challenger banks that are likely to emerge. I mean, the reality is that we look to mainland China for much of our inspiration, as it were, in terms of the Alipay and financial ecosystems, Wechat, Tencent, etc. While you guys were building the businesses, were there international comparators that you looked at for lessons learned, or were you starting afresh?
Yeah, I think there's always companies you admire, right? I think one company in this part of the world that certainly gave us a sense of inspiration was Wechat. We had this idea initially of being the Wechat of the West, right? And then we grew up a little bit and we realized...
Isn't that WhatsApp just without any of the additional functionality?
No. So much more than that. We'll talk about it another time. No.
Well, actually, on that point, by the way, I should say Kakao Bank in Korea, which EY plug, we were involved in designing and building. I mean, that's exactly that. I mean, they took the largest messaging service in Korea, about 38 million monthly active users, and it built a bank on top. So this is kind of where I'm going with the point. In Asia, I think, we've seen Kakao Bank, we're seeing some emerging players here and in other markets where they're looking at not just building a digital bank, not just taking the functionality of a bank and digitizing it, but thinking what are new ways of serving customers through contextual commerce, financial services. How do you guys in the UK view the world through that prism?
I'd say there's two sides to it. So on the one hand, for kind of the tech and user experience, we looked just to tech companies for that. And when we were looking at APIs, so APIs have fundamentally changed the way that software is built and brought to market in consumer technology, but that had never been done before in UK banking. Like, no one had open APIs. So when we looked for best-in-class ways of doing things, like, your API is only so good as it is accessible. What does that really mean? We really looked to consumer tech for inspiration from that. But really, when it comes to platforms and data and what's possible, we very much look to the east more than to the west. Because when you look at Wechat or Alipay, there's so many more that are doing interesting integrations with partners that we're just not really seeing in the US and UK until really with the advent of Starling and now a few others who've really come across this vision of like, oh, we don't have to do it all ourselves. You can actually have these integrations and that can provide a better experience.
So this is the Starling marketplace model you were referring to.
Yeah.
I mean, it's a kind of an interesting one, Chad. How do you guys feel about partnerships with fintechs or how do you see the world through that?
I'm going to be very controversial. I believe the marketplace model is bullshit. I believe consumers are becoming more lazy. They're expecting more from their service providers, and rightly so. So what they want is they don't want you to inundate them with lists of options that they could use. They want to give you a little bit of criteria, and you find them the single best deal possible delivered right to them. I mean, that's why we're trying to do things more in-house, because what that means is we can offer the best possible value. We'll assess that with the market. We can put it right in front of our consumers. And if ever it needs enhanced and changed and updated, we have the power to do that. And if you're working with a partner, you're pretty restricted on that, right, in terms of what their offering is. So my view is that, and equally, these things make little money. You get a small commission in terms of the company that you're working with. I mean, one thing I'm proud of at Revolut is, you're right, we never became a bank, and every single year we've increased our revenue 5-fold. We broke even for the first time month on month in December 2017. So we're actually showing that even without being a bank, we're making more money than the challenger banks. So so there's parts of that I agree with, but I fundamentally disagree. And the reason for that is I feel like you've lost faith. Oh, God.
See, she just punched him back. It was so fast, you didn't even see it.
Well, so the part I disagree with is, so customers actually with financial technology...
It's literally broke. Okay, I guess we're standing for the remainder of this session.
No, you're not recording this, sorry.
Mate, you sit down. You sit down, I'll stand.
Yeah. So the part that I disagree with is that I feel like customers actually with financial services are happy to do research and figure out what's best for them. And so for us, What happened, so in the UK, the Competition and Markets Authority did this year-long analysis of the industry, right? And they found a few things. So on the one hand, banks had really complex fees. No one really knew what they were actually paying. They had hidden fees and complex fees. They didn't know what they were paying, so it was hard to compare. And then it was really hard to switch. So you'd see the switching rate of 2%, right? 2% of customers switch banks. But it's not because they were overwhelmingly satisfied. It was just because of a lack of transparency. So that's why there was the advent of open banking, with this idea of giving customers choice. The point that I think Chad makes well is that customers do, though, they don't want to be inundated with just lots of options. They want a product that can use their data intelligently to help them find the right product for them. But what they don't want is to just be upsold this one product that you happen to offer, whether you built it in-house or you deeply integrated it. And so, yeah, if you're scouring the market and you've actually integrated in all these products and you use data intelligently to help them find that, yes, and that's an effective marketplace model. But what I think we're seeing, and no offense, but like Revolut and N26 and others who do a marketplace, it's not a marketplace if you just deeply integrate one product. That's the exact same as the traditional like banking business model. It's just someone else's product rather than your own.
So yeah, I think there's different terminologies in terms of marketplace, right? So my view is, I'll give you an example. We launched mobile phone insurance, something that was really desperately called from our customers. And what we did is we were the first to make it pay as you go. So what that means is you could travel worldwide. We'd cover you for all accidental damage for as little as £1 a day. So if you're away for 3 days, you just turn it off, and when you come back, you turn it off. And you only get charged for when you use it. We're not going to lay you down with some big subscription, 12-month, 6-month contract. And it absolutely blew up. People were like, I'm in control. I'm not getting it cheaper than £1 a day, and they're not covering me worldwide. They're limiting me to my home country. That was an example of building something in-house, making it as streamlined as possible for your customers, doing your research to know it's faster and cheaper than anything else in the market, and we've had over 300,000 customers sign up to it.
But presumably, Chad, in that case, you're working with an insurer in the background, right? So there's still a partnership in play there. I mean, I guess my point is, and again, looking at the kind of Chinese models and what some of the joint ventures and initiatives on the challenger bank here are doing, they're saying, what is our core proposition? What are we going to be? What do we absolutely need to own? And then what are the additional things that we can partner with through either joint ventures, commercial arrangements?
Yeah.
What are the adjacencies that we don't necessarily need to own because it's not our core competency?
Yeah,
I actually suspect you two are somewhat aligned on this, but I think maybe it's a terminology issue.
Well, and I think there's another key point. So you're raising the point around commission. So for us, so we got the banking license in May 2017, but then literally the next business day we had to submit a variation of permission on that license to offer the marketplace. So unless you have this full regulatory permission, you can't accept commissions from these partners. You're going to be an appointed representative, and you're restricted on the amount of commission you can take. So it doesn't make sense unless you're actually fully licensed to offer the service from a commercial perspective. But if you do it strategically, then you can end up with very strong revenue streams. The difference, I think, though, is with a marketplace, whether it's you or for us, even if you integrate one partner, is when you integrate with fintechs, their business models are just very different from traditional institutions. Their fees are lower because their costs are lower. So the way that you structure your commercials is going to be different than if you're working with a large traditional institution. The benefit of the marketplace, though, so if you offer that type of insurance, that's going to be really great for a set of your customers. But it's generally speaking really hard to find a one-size-fits-all product that meets everyone's needs for each category. And then these products are spending so much time investing in their user experience that to try to rebuild that in your app and keep it up to date, particularly as a financial technology provider where regulation is going to affect like what data you collect and how you report it, it's very difficult to do that and scale it in a meaningful way and to give your customers choice and actually meet their needs effectively.
Sorry, do you want?
Yeah, I mean, look, we know we disagree on this topic, right? You're not going to convince me, I'm not going to convince you.
Well, okay, disagreement is welcome. I mean, actually, but the reality is you're both doing, I mean, both firms are doing very well, albeit in somewhat, sorry, Chad, you want to?
No, it's fine. I think the point I was just going to make was that keyword user experience. Like, my view is that a good user experience is not bloating them with multiple options. I know you can look at it from one sense and be like, yeah, moneysupermarket.com, I'm going to scroll through 9 pages of options. My view is a good user experience is listening to what kind of money they want to pay, what kind of service they want, bringing it yourself and giving them that one or maybe 2 even options of, you know, the best possible value on the market. And as I said, that user experience is much better because you're putting it right in front of your customer and saying, this is what you've told us you want, here it is. As opposed to giving them 30 minutes to scroll through T's and C's and everything of all these partners that you're putting on.
I mean, I think this is an important debate, but I don't think we're going to solve for it in 10 minutes. So let me change tack a little bit and say, what does success, and please don't answer in marketing terms around, making our customers happy and stuff. I get that. Let's take it as tape. But what does success look like for Starling and for Revolut over the next couple of years in real terms, in terms of customers, market share?
Yeah.
I won't bug you about profitability, but you know what I mean? Like, when will you guys know, okay, we've still got a long way to go, but this is success to us?
Yeah.
I think for us, it's clear, right? One thing I love about Revolut is we have this internal and external phrase, which is no bullshit. So if you can't do something, say you can't do it. If you can do, back it up. Right? And there's a lot of companies say, we want to be billion customers, we want to go worldwide, and then internally, nothing's been done to actually accommodate that. Expanding into new markets, we know from first-hand experience, it takes minimum 2 years to get into a new market on average, and we're just about to do that. So for us, we're actually building this global payments network. So when we launch in the US, in Canada, Australia, New Zealand, Singapore, Hong Kong, Japan, we're actually going to have, in my view, we could be signing up 50, 60, 70,000 customers per day. Revolut will be as big as Uber, as Airbnb, but from a finance perspective. And I think this thing for us, so there's that side, which is growth, and we'll make more revenue, and everyone will be happy, yada, yada, yada. But I think the other side is just the other things we can do, such as expanding into markets around the world where there's a huge unbanked population, looking at parts of Latin America, Africa, and how we can actually, as a tech company, bring those banking solutions to those people. Equally, I love the fact that Revolut is supporting people who live internationally, whether it's low, medium, high-skilled migrants, it doesn't matter. When we launch in all these countries, we'll be able to make international transfers instant and free between those markets. Right now, it takes 3 days to send money from the UK to the US on average. When we have our license and we're officially launched there, with Revolut to Revolut, we can make it instant with zero markup or fees whatsoever. So I love the fact that we can go to the world, bank the unbanked, create a whole payments network, and literally tear down financial borders all over the world.
Yeah. I think if you had to give like a tagline to it for Starling, it would be, we want to be the world's best current account with this connected platform and ecosystem. But I think what that really translates to is we're really passionate and have a big vision around the tech. Because the tech side is what you haven't seen, that kind of transformation in banking really until now. And we're at the forefront of that. And so on the one hand, we've made a lot of progress in terms of, building the bank from scratch and the new user experience. But there's so much more that we can do on the back end side that's often a bit less sexy, but the infrastructure play and the platform, how data is used, how it helps customers, there's so much opportunity there. So I think for us, it's really more around continuing that transformation with technology and how we're really pushing banking as a service in addition to just the B2C side with the retail account as well.
So thinking about the incumbent banks, the traditional banks in the markets in which you're operating right now, I mean, how have they responded? How will they respond? I mean, what's your general view on, this notion that, everything that fintechs do, the banks will ultimately copy, and they've already got distribution, they've already got customers. I mean, how do you view that argument?
There's two things that they can't copy well. So one thing is the cost basis, right? We're mobile only and we're 100% cloud-based. We don't have any physical infrastructure and we don't have customers with expectations around providing that service. So I think because of that, our cost basis is so low. But also with being a new tech company, we move incredibly fast. So within our first 475 days of production, we did about 377 platform releases, which is about 1 to 2 platform releases per day. So we're working in continuous delivery. So right now we're already ahead, but the pace and the velocity at which we're able to move is also so much faster than the traditional banks that I feel like they'll try to keep copying, but for those who aren't really working on it now, if they're just kind of starting the journey in 2 to 3 years' time, it'll be a bit too late.
But sorry, before we jump to chat, I mean, I think this is one of the topics we hear quite a bit around. I mean, I get the cost advantages of being a pure mobile-only solution from an overhead perspective, branch network, etc. But I mean, you also have capital costs. I mean, as I like to tell everyone in the market, I mean, in Hong Kong, the average account balance is 200,000 US. And I think anyone here will tell you they don't typically pay a lot of interest in this market. So the actual capital cost advantages for an incumbent here are very significant. I mean, how do you compete? I get how you compete on speed and technology, but just in terms of established installed user base and scale, I mean, it's the age-old, do the incumbents get innovation before you get scale? Is that a danger?
I mean, it's a fair question, and I think what we've seen is already, the traditional institutions, we have the ability to go into the app and freeze your card if you lose it. And obviously, the traditional banks are kind of mirroring these, mobile experiences. I think with capital, we're seeing some very different ways that customers engage with this depending on which region of the world you're in. So the US versus UK versus Asia, I think is quite different. In the UK, what we see is that there's a set of customers who do just put in the £85,000, which is the limit for FSCS protection, and then optimize across their other accounts. They also usually use it in tandem with a credit card, and what they'll do is they'll use the credit card to get points and pay it off from their account once a month. For Starling, we're quite keen to be balance sheet light, though. So we're very happy for our users to be with Starling, but to move their money into other apps and services, or to use another product or service in tandem with Starling. So that's something that's kind of been built into our business model from day one. But what do you think?
Chad, imitation is the most sincere form of flattery, and it feels to me like a lot of banks are looking at Revolut and saying, "Wow, these guys have done great. You know, should we try and copy this? Should we replicate?" How do you feel about the incumbent response?
I think fundamentally, Megan touched on it, speed is everything. My personal viewpoint, which is, again, a little bit controversial, is I think there's a lot of challenger banks right now. There won't be in a few years' time. I think a few key players will make it, and how they're going to make it is speed and scale. And that's why Revolut is so focused on expansion and product diversification, because we know that just limiting ourselves to one small market or one small region even is not enough. We know that just doing things a little bit better and faster than banks is not enough. We want to bring people to, that's why we're launching things like commission-free trading, cryptocurrencies. We're diversifying and showing people that, you know, we can provide you with multiple finance options. So, banks can't do it at the same speed, right? There's so much layers of bureaucracy and red tape, and you could turn around and say, oh, well, yeah, they'll just stop that. The amount of banks I've spoken to who are like, you'd think, right? But they have no intention of stopping it. So I think you'll see a lot of banks buying out challenger banks and whatnot and trying to adopt the technology, but ultimately they're still going to act with a legacy mindset. They're not going to attract the same quality of engineers that companies like Revolut and tech companies generally do. Unless engineers are purely money-driven, they may just go straight into banks. So for me, I think they will catch up. They will start to copycat some features. We've already seen it. But if they copy us 6 months from now, we've already launched 10 products since then. And we're moving at such a lightning speed. So.
Yeah, but to be fair, I think one of the points that you mentioned is around the kind of consolidation or the kind of emergence we'll see over the next few years of like category leaders. And I think that will be some of the traditional institutions and it will be some of the challengers. I think the space is big enough for quite a few. But I definitely think we're going to see more successful players on both sides. Some of the traditional institutions who do it really well, and some of the challengers who do it really well, and then both traditional and challengers failing.
Well, how do you guys, I mean, Megan, you mentioned in the presentation earlier, obviously you're providing some services to some of the incumbents now, be it better payment rails, a bunch of other stuff. Is that a key part of the business, not just the kind of B2C or the consumer and business-facing aspect, but also as a service provider, as a technology provider?
Yeah.
How do you see the future of that for Starling?
Yeah.
And then I want to ask Chad if and when he will be partnering with banks in the future. I'm looking forward to his response. But
Well,
how do you see that as a growing need for incumbents who recognize, geez, we've got these big competitors, we cannot move fast enough, we cannot necessarily attract the same talent. But hey, if we partner with a Starling, maybe we can get there.
Yeah, well, it's fantastic because it's probably a conversation that'll be happening here in Hong Kong with open banking as well. Is that a lot of the traditional institutions saw it as a huge threat because all of a sudden, if they're reduced down to just the bank account, right, the infrastructure player, the dumb pipes, that's not good for revenue and profitability for them. And so it was all about like, okay, if banking is becoming invisible, it's being integrated in all these different apps and services, it's at the point that you need it. All of a sudden, customers have this ability to connect various apps and services in an easy way. What does that mean for the business model? So for us, we were very much building to turn this into an opportunity. We're like, okay, if it is the infrastructure play, how can we really take the kind of software as a service model, bring it into banking where it's very low touch sales, customers can help themselves, it's all modular, it's all via API, it's very fast. So now when we see all of the traditional banks who are looking to really kind of do digital in the UK, part of them are actually using our services because the tech is better and the costs are lower. It's easier for them to get to market faster by going through our rails. So it's something that's been a key differentiator for us, but it's all just around how tech is enabling a better quality of service, and most people don't argue with better, faster, cheaper. And that goes for fintechs as well as banks alike so far.
Great. Chad, will you be sitting here next year saying, actually, our following bank partners are...
It's interesting. I mean, you can look at it in different ways, right? I mean, in one hand, partnering with a bank is a bit like turning up to a house party with your grandmother, right? It's it doesn't quite have the same effect. And I think for us, we could go down the the ability of selling our services to banks. But on one hand, you have to look at it and be like, well, is that strategically sensible for us? Because one thing Revolut's focused on right now is us, is making sure that we're building the best technology and making sure we're getting it to market first. And then there's a point down the line where you can take the Amazon approach and start white labeling your services. So
we're the real Amazon, right?
Yeah, if you say so, Megan. And I think on one hand, as I said, we are building world-class AML compliance anti-fraud systems. We had the top CEO of one of the biggest global banks in the world drooling at the mouth, who said, what you've just shown me in charts and diagrams in 10 minutes takes one of my guys an hour in spreadsheets and documents. So there's an ability where we can absolutely sell on that kind of technology and make a crap ton of money. But would we want to actually sell them services that really improves their consumer-facing service, if that makes sense, not their back end? I'm not sure if that would be the right approach for us. It may be in the future. It's not necessarily my call. But I think it's maybe a little bit too early for us to be diving into that area first. I think we've still very much got to establish ourselves. It's like people often say to me, wow, Revolut, you're 3 million, blah, blah, blah. We're not even 1% where we want to be. So I think before we start spreading ourselves too thin, we focus on building our brands, and then we'll start helping other people.
Mm-hmm. Excellent. Look, so I think some nice debate there, divergent opinions on both sides, but I think the reality is these are two of the most impressive fintechs, not just out of the UK, but globally. And I think, we've got a couple panels coming up now around virtual banking here in Hong Kong and in the region. And the reality is I do think now this is a question for us looking to you guys and saying, wow, some interesting business models, some interesting opportunities. How much can we replicate? How much can we partner? How much can we steal, beg, or borrow? But, frankly, I think we're delighted to have two great representatives from Starling and Revolut here. So please join me in thanking Megan and Scott. Chad.
Scott.
Who's Scott?
Cheers, you too.